These tech IPOs just keep coming. This week we have Angie's List and InvenSense. Now, Angie's List is very interesting because they do have some stickiness with their customers signing up for subscriptions, but that doesn't mean they're definitely making money. Francis, what do you think about Angie's List?
Well, I think Angie's List is going to go up in the offering. It's an internet-based company that has over 1 million subscribers as of October. So whenever that happens, historically, the IPOs have gone up. I mean, Groupon, Zynga, Pandora. Zynga hasn't come yet, but it will go up. But if you look at the financials, what they've done is they've paid to establish their customer base. For the September quarter, they had $24 million in sales and they lost $17 million. So on an income statement basis, they're not doing that well. But they get paid up front from their members, and so their cash flow is not as bad as their income statement. I think over time that'll grow into a valuation. I think it'll always seem expensive. But it's impressive that they have 1 million customers. They spent 113% of their September revenue in sales and marketing. So they want to be compared to Amazon, it may be when they can cut back on the marketing and the sales.
All right, and then we have InvenSense. Now, this is a motion processing company, but a lot of their sales comes from Nintendo, and the Wii has been dropping off. So are they going to be able to make up for that in the smartphone world?
Well, that's a good question. As you said, it's motion processing for handheld devices. They include games and in the future, mice. And they've converted from analog to digital. If you annualize their September quarter, they're coming at 13 times earnings, which is low. But they do have customer concentration. In their September quarter, their largest customer was 44%, probably Nintendo. But it looks like they're diversifying the customer base. I kind of like that one. If the December numbers come on, I think it'll do well. What they're trying to do then is take motion processing and apply it to broad consumer markets, which is kind of exciting. We'll know a lot more when the December quarter is finished. There seems to be not a great demand for that stock in the market, pretty much because of what you said, the customer concentration.